A new YieldMax ETF goes live today. Is it a good investment? Let's find out. This video is not financial advice, nor is it a recommendation. Please do your own due diligence before investing into anything. YBIT, YieldMax's newest ETF, employs the usual YieldMax strategy on a Bitcoin futures ETF, BITO. When you invest your capital buying shares, YBIT buys treasuries with 6-month to 2-year maturity dates. Then they sell a long at-the-money put, meaning the strike price is whatever the reference asset is that day, with an expiration between 1 month and 6 months out. Next, they use the premium from that put to buy a call with the same at-the-money strike at the same expiration. These long contracts are their long exposure. Lastly, they sell a short call option with a strike price between 0 to 15% out of the money. The premium from this call pays for the monthly dividend. As we've seen with other YieldMax ETFs, the performance of these funds relies solely on the performance of their single reference asset, so it's important we look at that ticker as well. BITO is a ProShares Bitcoin ETF. Contrary to how it sounds, this ETF does not directly hold any Bitcoin. Instead, they trade Bitcoin futures and also invest in an S&P Bitcoin Futures Daily Index that also swaps Bitcoin futures. For those who don't know what futures are, they're basically options contracts without the option to let them expire worthless. If a futures contract is held to maturity, the block of shares, or in this case the 5 Bitcoins, must be bought. Knowing this, YBIT is essentially a synthetic covered call against futures against Bitcoin. The performance of YBIT and BITO both hinge completely on the price action of Bitcoin. In both the YieldMax fund and BITO, gains are capped, potential losses are not. Can YBIT make money? It's certainly possible. While we don't yet have a track record to judge YBIT by, we can look at worst case scenario using another YieldMax ETF, Tesla. Tesla suffered from the Tesla stock crash earlier this year and ended up doing a reverse split once the share price went too low. Considering Bitcoin tends to have really high highs before a brutal crash to a new low, reverse splits are something to seriously think about when considering buying YBIT. It could perform well at the moment, but once the inevitable crash happens, blood will be in the streets in this ETF. Both BITO and YBIT pay out monthly dividends. However, since YBIT does not directly hold shares of BITO, you as a YBIT shareholder will not be paid BITO dividends. YBIT's expense ratio is 0.99%. Do you plan on buying YBIT? Let us know in the comments below. If you like this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.